Gordon, it's all very reminiscent of 2018 at the moment. Concerns about social media policy, concerns about executives leaving. Why didn't the market sell off more?
It remains a mystery to us. I mean, you had the general counsel leave after 2 months on the job. This was a real, if you will, adult in the room, someone who is respected and was thought to be overlooking Mr. Musk. But what's interesting is the tweet last night that they were going to produce 500,000 cars this year came on the same day that in their 10K they said they were looking to achieve 7,000 Model 3s per week of production, or 350 per year by the end of the year.
Yeah.
So it appears that there's no oversight still, and we found the tweet yesterday astonishing, quite frankly.
So, Gordon, I'm just wondering, to follow up on Caroline's point, shares down a whole whopping 1.3% on this misfire from Elon Musk, yet another misfire, plus the exit of general counsel. At what point, you might be right in the long run with your bearish view on Tesla, but at what point is it just unprofitable to keep going with the short wager, given how much short interest is out there?
We would be aggressively shorting Tesla right now with all of our might. Listen, there's a couple of things we think propping the stock up. Just yesterday on CNBC, there was an analyst who has a $4,000 price target on Tesla and talks about their full self-drive technology and their ability to effectively issue a fleet of self-driving taxis. If you look at the leaders in full self-drive technology, the Waymos of the world, et cetera, what they said is that they don't even know if by 2025 we'll be there with respect to FSD technology, full self-drive. So I think that people are putting ridiculous targets on Tesla. And if you look at the numbers, look, Tesla is trading at a forward EV to EBITDA multiple of 16 times. The rest of its peers, Ford at 2 times, General Motors at 3, Fiat Chrysler at 1. Tesla's CapEx less is depreciation.
Hold on a second.
Amortization.
Gordon,
Yep.
Gordon,
No,
hold on one second. Because honestly, this has been the argument made about Tesla for a long time. My question is, how long can the bears stand and afford to remain bearish? At what point do they just lose all their money and they got to leave? Because it's expensive. Right.
So let me answer that question specifically. So think about this. The promise of Tesla in 2016 was we're going to provide you with a $27,500 car that you're literally going to be able to climb in your back seat and let it dry you from coast to coast. And there's going to be free supercharging across America. None of those things are true. But on that promise, they garnered 450,000 reservations. They've essentially burned through all those reservations, and they've had virtually no competition in the full EV, essentially electric vehicle space. Now you have real competition coming in, the Audi e-tron, the Jaguar E-Pace, the Porsche Taycan, etc. So this is the first year you're going to see real competition. Again, what I was saying is that if you look at their investment, their CapEx less depreciation, amortization, PT&E, it's basically flat in Q4 18.
Yeah.
In Q4 of 17, that number was like 600 million. Quarter over quarter, the revenues we believe are going to shrink in Q1. Their deliveries are going to decline in Q1, and we think they're going to report a loss in Q1 after racking up $976 million in losses last year. The point is, we think the pen hits the paper this year. We think the bulls in the stock have to come to the realization that they're not going to hit their financial targets, and we think they get really hurt in the back half of this year. So to your question, when does it pay off? We think it pays off this year as competition comes in. Clearly there's financial issues, but we don't think the SEC is on their job, so we don't think that's what's going to bail the bears out. We think when the stock falls, the SEC will come in and see a lot of things that we see. But we do think competition is real, and we do think the issues at Tesla are real. We think Q1 is going to be the start to what we think is going to be a precipitous fall in the stock down to our price target of $72 per share.